Welcome, guys. It is February 4th, 2026. Today is our scheduled weekly coaching call here at Get Paid Daily. This is a time where we kind of back the dump truck up and unload information, data, perspective on what's happening in the market, what's going to happen in the market. It's not a predictions show, it's not future telling. It's simply an evaluation of where we are on the hiking trail, for lack of better words. It's a market cycle knowledge exercise to make sure we are doing our best with our flywheels and with our portfolios. And right now, before I share anything on my screen, if you'll allow me just a second to, um, well, to begin to digest, really where we are. It's a fascinating house of mirrors that I find myself in, and then, of course, we collectively find ourselves in. Depending on the expert, quote unquote, that you look to, you could see someone saying that we're just starting a bear market. You can see people saying that we're not in a bear market, and you can see people saying we've been in a bear market and we're almost done. It can be really confusing, and I'm hoping today that we can not necessarily draw a line in the sand. I think my one of the biggest convictions that I'm developing is that the words or labels, bear market, bull market, etc., are oftentimes either miscommunicated or misgauged, misweighted. Um, and what those actual definitions are, can be subjective, and yeah, it can be confusing for the lack of better words. And that doesn't help people's emotions. It doesn't help people's expectations. And so what I'm trying to do is just provide almost a mosaic painting or portrait of what's going on in the market. And depending on where you are in your journey with crypto, you may be, sitting pretty because of your timing and etc. Maybe you got lucky on some great entries. Maybe you're down 90%. I don't know. That's not, this isn't necessarily a rehabilitation center if that's the case. It's meant to be, hey, where are we now and what can we control and what can't we control and what's ahead of us in the next steps in terms of market, economy, and dynamics. So forgive me while I squint because all of a sudden now I've got a sneeze coming on. I'm getting over a cold, but I think I'm going to shake it off. Okay. Now, let's start with the confusing stuff, shall we? I'm going to share my screen as always, and just going to share some thoughts, sentiments, particular um, definitions, explanations. We're just going to throw stuff out there. Again, none of this is financial advice. It's not necessarily all original to me. Some of this will be original to me, and I'll try to be clear about that. But I just want to share data. I just want to share information and see where we end up. So I don't necessarily have a yellow brick road that I'm following here. Um, okay. And I'll do my best to keep up with the chat as always. I'm a one man band here, so for those of you, yeah, the solo cup is definitely a reminder to water my plant. But I have plenty of those solo cups, as you might imagine. Okay, so cycles with Bach here. Simply put, TGA. Anybody remember what TGA stands for? Just I want to real quick for all of my members. Does anybody know what TGA stands for? Sorry, am I sharing the wrong screen? There we go. Yes, Treasury General Account. So the TGA is like the checking account of the United States Treasury. Um, TGA down, reserves up, liquidity boost check, risk assets go up. Risk moves further out on the curve. For example, crypto, when liquidity hits the system and aren't held back. The CT charting bros don't understand this on the macro. And he quotes his previous tweet. The underperformance of Bitcoin and crypto in general is largely driven by the liquidity constraints from the buildup of the Treasury General account. Since inauguration, the TGA has gone from 640 billion to now 923 billion. So that's a lot of liquidity not coming into the markets. Then in October, we were hit with a 40 plus day government shutdown, longest shutdown ever, which meant no money could leave the TGA, equals tightening liquidity. Then, here in January, another partial shutdown. News just got out that it will end now. Shutdowns and thereby TGA buildup really hurts risk assets furthest out on the risk curve, as we have seen. But it doesn't mean that we have entered a bear market, and certainly not because CT bros are saying it based on a chart. Sorry for the long rant. So there's one perspective. And it's logical. The Treasury General account, we can look at it. It very much is correlated. I don't know if necessarily causation is the appropriate term, but it's definitely what I'm. Yeah, that's kind of the trick here in crypto, is what is correlation and what is causation. There's a lot of correlation. There's very little causation, and trying to put your finger on a particular causation is difficult. Matthew Hyland says nothing about the crypto price action changes any of this 2020 story. BTC was down 50% from the 2017 highs in the summer of 2020. Ethereum was down 75% from the 2017 highs in the summer of 2020. Right now, both are better positioned off the 2021 highs. Bitcoin is about 10% above the 2021 highs. Ethereum is negative 55%. And he's got this, again, quoted tweet. PMI in 2020 was above 52.6. We have that here. Check. DXY broke below 96. We're close. We're not there yet, but it's in that trend. Gold topped in 2020. Maybe the gold topped. Maybe the silver topped already. Russell all-time high broke in 2020. Yes, check. Bitcoin dominance 60%. It's under 60%. ETH BTC, check. Alt dominance 0.12. Check. Russell S&P 500 reversal 2020, check, or likely. Russell NASDAQ likely. Copper gold reversal likely. These are all really good. But if y'all want to screenshot this, these are all really good like indicators just to keep an eye on as potential inverse or correlated crypto liquidity market boosts. So all right, there's another perspective. Henrik Zeberg, we're far from the top. We're far from the top in price. That's for equities and crypto. The final rally will be extreme. That's pretty contrarian right now. Yamin X quotes this Telegraph, and yesterday Matthew Hogan came out, the CIO of Bitwise, which it's funny. When I first read this headline, I thought, that was an about face because he's been one of the bulls. He came out and said the crypto winter started in January of 2025, but was masked by ETF and digital asset treasury flows. He adds, we're closer to the end than the beginning. Now, January 2025 actually is a good. I would say he's right about the crypto others chart. And this is where things are starting to get sophisticated and complex from a Bitcoin perspective, because Bitcoin has been in this like expanded flat along with Ethereum, and we'll talk about that here in a minute, pattern where it's making higher highs or had made higher highs, but others have been bleeding. And specifically in 2025, there was one moment of outperformance, but it was miniature. 2023 and 2024 both had strong outperformance seasons for altcoins. But what you mean is saying is interesting. Interestingly, I read Bitcoin. Let me zoom in this chart here. I read Bitcoin to be in an expanded wave four flat correction start from early 2025 sell off. The good news is that we could get 150 to 200K in wave five next, likely this year. Does it feel like such a movie is such a move is impossible? Do you feel silly or even for even suggesting it? It's hopium, quote unquote, and we are obviously going lower. If you do, those are exactly the sentiment conditions where such a move happens. And this is actually a popular chart. There's a couple of these charts floating around right now. And I'm going to show a chart here in a little bit that actually shows confluence with this. You can look at Google and Nvidia. Both did the exact same thing that Bitcoin's been doing in this wedge pattern. And so, I mean, we're kind of at that place in the market where we really need, if this is going to happen the way we think and hope it will happen, we're kind of in a 2 week window where it's probably going to have to start, making that move for that kind of expansion to happen. IBIT buying the Bitcoin crash, 60 million inflow on February, second day of inflows. Jacob Canfield says buying Bitcoin at under 75K will be fantastic buys. Buying a 42% pullback with max fear in the market is always a better buy than buying euphoria and all-time highs. But buy depression, sell euphoria. Another one from Jacob. Bitcoin, great reaction from liquidity zone. I've been targeting for a week. A weekly close above 80K would give me high confidence that we are nearing a local bottom. I wouldn't be surprised if they run the lows a few times to capture more liquidity. But again, I think this is a good area to scale into spot longs. And what he said here is exactly what's happening. If you notice, or if you look at the Bitcoin price even today and yesterday, it's being very erratic, bouncing off that 73 high 72s zone. They're definitely trying to flush that liquidity. And if you look at the heat maps, let me hit refresh here. Over at CoinGlass, no data. Come on, guys. We'll just look at this one. I think it was the 1 week. Yeah. Let me highlight this a little bit more. There's still some strong liquidity that you can kind of see. They're trying to when I look at these heat maps, depending on the time frame, it's almost like an archaeologist that's chiseling. The market makers are just chiseling this liquidity out at these lower levels. Now, if you zoom out, hopefully this data will load for me. I mean, on the 2 week time frame, and this is Binance. This is the Binance perpetuals. You can look at the different exchanges, but Binance is the largest in the world and notoriously the most crime centric when it comes to liquidating traders. There's obvious liquidity to the upside. It's empirical. So I think we're in the doldrums, for lack of better words. We're at the place where we're basically creating a bottoming structure, a local bottoming structure. But that local bottoming structure, it's almost like You think the UFC fight's over, and then the referee turns his back, and the fighter hits the guy on the ground in the face one or two more times. That's what it kind of feels like right now with price action. For those of you who saw Bert's post here earlier in our chat, I would highly recommend you go and watching this video. I don't know this guy. I've read a little bit of his stuff. He's a WD Gann follower, Gann cycle theory. Um, Audio is terrible. I don't know what happened to his microphone, but you can make your way through it if you're patient. It's about 24 minutes long, but he does pull out a lot of the cycle trading theory stuff that I talk about. He is heavy on the WD Gann cycle stuff. I would encourage you to look up Gann with two N's when you can. But his timing counts, his the hermetic timing cycles of the different digital assets that we're looking at kind of correspond with this 2 week um, window of liquidity. So, you know, bottoms, especially when you're looking at daily charts, bottoms, especially on daily charts, like just because you might see a Wyckoff accumulation or a spring or a CME gap or something like that, they don't necessarily always turn into a V-shaped recovery. And sometimes a V-shaped recovery is not necessarily what we want to see. Those V-shaped recoveries leave big vectors in their wake that market makers use to, again, flush liquidity more and more. Um, I just had a kind of an internal freak out that I didn't hit record, but I did, so I'm good. By the way, if you missed our solo cup session yesterday, I'm going to review what I went over there. So don't feel bad if you missed it. I got my recording didn't work yesterday, but it is working now, so I feel good about that. So, credible crypto here. Again, contrarian take here. A small sample of what will be included. He's doing like this 3.5 hour video series, so go watch it. Give him some likes and follows. He's pretty generous with his information. The people that are saying that CRV is dead, which by the way, if you're looking for an awesome token or investment, this is I don't own it. So just full disclaimer. I could see myself owning it. CRV or Curve Finance is awesome because they control, almost monopolize 40% of the stable coin yield on the Ethereum blockchain. It's one of the most dependable and best economics or tokenomics of all DeFi protocols in all of crypto. And it's effectively been in consolidation or accumulation. It's the reason why people think it's dead, just to kind of undercut his paragraphs here, is because it's done basically what Ethereum has done. It's been like in this really boring channel with no parabolic rise at all. All the while, the protocol, the fundamentals, the bedrock under the ground is stronger than ever in terms of what it actually does, what its utility is, what its usability is, etc. So, unbelievable entry point right now for Curve Finance. The people that say that Curve Finance is dead today are the same ones who said who would have said silver was dead at $4.89 or that XRP was dead at 50 cents. They would have faded both at high time frame, macro bottoms, before some of the most aggressive expansion phases we've seen in years on both respective assets. After forming an accumulation base over 4 years in its own high time frame range, XRP ran 6x to range highs in under a month. Pause. The house of mirrors that I said that we're in right now, and how no one knows if we're in a, well, everyone has these polarizing opinions on whether we're in a bear market, whether in a bull market, labels, right? If I What I'm trying to do is be a little bit more opaque and ambiguous with how I'm looking at the market so that it's not so binary because of what he just said. XRP did a 6x in a 1 month window. Okay. Like, I'm not selling my Jasmy here. That's dumb. I've been averaging in on Jasmy all the way down. If anything, I'm guilty of being early to this bottom, but like it can 10 to 15x in 6 to 8 weeks. And my thesis still stands, directionally speaking, but my thesis is being invalidated from a timing perspective. So, and again, I'll get into a chart here in a second that kind of validates it, but like I thought that December was going to be the pivot window. Um, that turned out to be invalidated. Why? Because Josh is not a person from the future. Then I was hoping January would be, but January turned out to not be that pivot window. And now we just simply are looking to see if February will be that. And again, I'll back that up here in a second. His final thought here is that CRV now looks to be wrapping up the final phase of its own 5.5 year long accumulation base, which is really, really dramatic. How long do you think it will take to hit its own range highs? So he's basically saying, hey, CRV doesn't even have to make a new all-time high for you to make a god-awful amount of money on this thing. If all it does was go from where it is now to its all-time high, what is that? It's at 20 in his image. It's 28. I mean, good gracious, that's a 30x. And that's it's a major top 50. I think it's top 50 or top 75 at least. It's got to be in the top 75, if not top 50 token. So just good stuff. Good fundamental, like buy great discounted stuff that's going to be here. And not, he's not saying buy a micro cap that just launched last Tuesday. This thing has revenue. You can actually look under the hood. I already talked about heat map. So, but basically they say Bitcoin looks like it wants to head up max to 86,000 in the bouncing coming weeks. So, Bitcoin history here, Gert Verlagen says previous cycle tops, which by the way, we're only like $3,000 away from the previous cycle top of 69,000. Previous cycle tops have never been revisited mid-cycle. Claims for 69K or lower feel similar to claims at 2022 bear market bottom for 10,000 and 12,000, while W4 is less than W1, wave 4 and wave 1. Time will tell. The market is never wrong. Again, more perspectives. ETH and others, same. It's all coiling, all compressing at unprecedented levels. This all lines up perfectly with that final major run I've been harping on about for years. The fifth and final gonna be one for the records. Just don't get shook no matter what happens soon. Dylan LeClaire of MetaPlanet. It's been a while since Bitcoin was treated as a contrarian asset, complete with the familiar chorus of skeptics deriding those who hold it. I've watched this movie before. He's talking less about price action and more about all of the Epstein conspiracy yada 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 stuff. And yeah, I've been here before too. It's called Mount Gox and FTX and everything in between. Bitcoin didn't break structure. It tapped the green zone, printed another higher low. As long as this holds, the trend remains intact. Pullbacks are fuel, not the end. The reason I'm willing to buy Bitcoin right now is because of May 2022. I bought Bitcoin at 32,000. It then dumped to 19,000 and 80% of my comments called me a moron. Then it went up 5x. My time horizon is long enough to wait out the bearish period. So those are some just like I think I find interesting takes that might help your mindset potentially on what's going on right now in the markets. But now I want to kind of turn our gaze over to the charts and talk more technical for a second. And I'll do my best to look over here in the chart or the questions real quick to see if there's anything. CRV is number 93 on Coinbase. Are you talking about Coinbase or Coin Market Cap, Brandon? If it's number 93, that would shock me, but I've been wrong before. Last year, we were all watching the M2 money supply, and many of our theses were invalidated with regards to correlation to crypto. I haven't heard anything about that in quite a while. Any thoughts about this? Yeah, I mean, um, M2 money supply was always, again, that's a great example, Matthew, of what I was talking about at the beginning of the call. There's a lot of correlations, but not causations, right? So M2 money supply is correlated until it's not. Um, Interestingly enough, going back to Bach's statements earlier, just to kind of explain this away, if I may, liquidity affects the furthest out asset on the risk curve. That is crypto. I mean, there's make no bones about it. Crypto is the furthest, lowest down the risk curve, right? And so whenever things like TGA is contracted or TGA is elevated, the general account, and that's just one variable that's indicative of this liquidity contraction. And then when you have the largest exchange on the planet have a deleveraging event because of a software glitch, because of their liquidation fiascos, and it breaks the back of like because that's the House of Mirrors part, right? Every other asset is at all-time highs except for Bitcoin and crypto. So you got to ask yourself, okay, is this all just a farce and it's different and it's in or was there some kind of systemic break that decorrelated from that made it decorrelate from the M2, which I believe that's what happened. And now it can recorrelate pretty quickly, which you'll see here in just a minute when I hopefully you'll see here in just a minute. Um okay. This is what you may have missed yesterday on our solo cup session. So right here, we're looking. I'm going to take these fibs off for a second. Gives a little bit more visibility. This is a multi-year overhead resistance. This is the ETH weekly chart. Let me go down to daily. Yeah. So multi-year overhead resistance line right here, going all the way up to where we are in time right now is about a $10,000 mark ish. From an Elliott wave perspective, we are in a three-wave pattern. A, B, C. A, B, C. And the problem that so let me back up for a second. The problem that everybody runs into, especially with the before I do the Elliott wave stuff, the problem that everybody runs into is um Ethereum being the largest or the largest, let's call it the largest DeFi token, right? It's the largest, it's the Pepsi to Bitcoin's Coca-Cola. When you're doing things like trading bots and yield farming, liquidity pools, swing trading, etc., all of this, when you see Ethereum doing this right here, let me grab my marker. Oh, everything in that blue circle there. When you see this, This is when the Wall Street banks are saying we've got to chop everybody to death and make them think that none of their tactics and strategies work so that they'll take their blankie and go home. Because if you look back in time, like even the last cycle, this was Ethereum. And if you look at the cycle prior to that, this was Ethereum. So like just from a very elementary basic pattern recognition standpoint, Bitcoin is or sorry, Ethereum has been in this what we call an expanded or running flat for years. And this has made it really hard for a lot of people because what ends up happening is um people the engines start revving up and people think they're getting in at a good time because they're still below previous all-time highs. So right here, if you get in right here, you're thinking, man, I'm still below previous all-time highs. This thing's about to break out, make a new resistance and go. But it doesn't break that overhead resistance. And so it comes back into this three-wave pattern, this Elliott wave pattern that we find ourselves in now, right? And so that's why, like, if you start a yield farm or a liquidity pool here and you got a short-term time horizon and Ethereum's just distributing for weeks and months, half a year, then your Chainlink or your Jasmy or your Solana, whatever your SWI yield farm is going to bleed until Ethereum says we're done. We're getting out of this cycle, right? So ABC, B, and then C. Now, here's what you need to understand. In Elliott wave, corrective B waves are terrible, emotionally terrible, price action terrible. They make you want to um, commit yourself to a psych ward. Terrible. They make you question all of your life decisions. They are notorious for mental warfare on you as an investor. And that's in hindsight, right? But if you can spot them, like where we are right now, if you can spot them, they make for incredible entry points, especially when you're in an environment when the corrective B wave is leading into an expansive C wave. Expansive C wave. If you'll notice, that was the last time we hit the overhead resistance line was the expansive C wave um, of this three wave this daisy chained pattern. And if you look at these previous expansion waves, this one here was 169%. 93%. I wouldn't necessarily even identify that one as an expansive wave. You could even look at this one as a 300% wave, but I'll just use these internal waves. This was a big one, but again, it didn't make it to the overhead resistance until it ran out of fuel. Why did it run out of fuel? Well, let's see. That was August 2025, and Bitcoin was stealing the show through October when Bitcoin made its new all-time high. And then, of course, by October 10th, we had the liquidity event. And now, ever since that liquidity event, market makers and central exchanges have been unwinding. And now, according to guys like where was it? Matt Hogan of iBit, wherever I had that tweet, he's saying we're almost done. We're almost through it. So it doesn't really matter what labels you use. It's just knowing like you are where you are with Ethereum. Now, can Ethereum hold this multi-year trend line or support line on this B wave? Maybe it might. It very well could easily go down to 1800 or so before it finds a bottom on here. But then what if it goes from 2000, 1900, 1800, 2200, whatever, and when you start looking at the Fibonacci levels for confluence here, it starts to get interesting. On the highest time frame, going back to the previous cycle top to the previous cycle bear market low, the 1272 would be 7800 here, which would put us right in this green box for an expulsive, impulsive C wave. And an Ethereum getting to a 1272 on an expansion moment is not crazy to think about. Okay. Then the other way to think about this is the most recent Fibonacci from August 25 till where we are now. I'll be gratuitous and say we go to 1900 on ETH. That's not my base case. But even here, you get a 1272 of 6400, a 1414 of 7400, and a 1618 of 9000. We mentioned Henrik earlier. He's saying 10 to 12,000. He's thinking 1618 up to 2 on the fib scale on this low time frame. So how, what does this tell me? It doesn't tell me the future in terms of from a low time frame standpoint, but what it does tell me is that my risk to the downside is far less, especially from a spot buy and hold perspective, than it is to the upside. If we go down 10 or 20% from here and then we go up, gosh, whatever that is, 5, 4, 3x, 300%, then I'm okay with, I'm okay, waiting that out. And if Ethereum does that, then all of your other top 50, top 75, top 100 majors are going to give you either a de-risking opportunity or an incredible profit-taking opportunity. That's I guess more of a tangible look into my thesis right now. Timing is hard. Timing is hard. Direction, not quite as hard. We can be directionally accurate or, hand grenades and horseshoes type thing. Timing is difficult. And that's where most of the sentiment comes from. Right now we're sitting on a 14 crypto fear and greed index. 14. And if you go back in time on this index, like if you would have just bought any time the fear and greed index was where it is now, you win, especially from a swing trading perspective. You also have the Clarity Act now at a 71% chance that it gets passed into law this year. And there's a lot of bears against this. And I admittedly, once the Genius Act passed, I think I underestimated the clarity, the friction that the Clarity Act would face, that it's now facing. And the Clarity Act is so important. It is the market structure that we need because without it, I believe we're not getting the institution. Let me take this back. Let me say this a different way. Without the Clarity Act, you're just going to continue to get institutional nibbling on crypto because why would you allocate 5% of your balance sheet as a major Wall Street hedge fund or fund manager if you know that CZ and his cronies overseas in a jurisdiction that are outside of the SEC and the CFTC can just market dump $1 billion of Bitcoin on a Saturday when nobody's in the office, right? So the Clarity Act um, creates rigid punishments for wash trading or liquidation, manipulation, whatever you want to call it. And it's a big deal. So if you live in a state right now and your senator is not voting or not adding pressure for the Clarity Act, I would probably say that it's more legitimate and more important than you think, and you should probably call your senator today. Um, I think it's imperative that you give them a call. That's all I'll say about that. Name that movie. I will not do my impression, but that I basically live that impression anyway. Joshua Eastman. That's funny. That's good. He says I live in Minnesota FML. Bitcoin. Currently at 73,000 at the time of this call. We definitely could see more downside. Couple of things though. Couple of things. This is a little redundant. Let me get rid of this. We're more oversold than we have been since the 2022 bear market. MACD is oversold in the negatives here. And the Bressert indicator, so just for everybody's layman's terms, whenever you see price charts like this, and then you got these other indicators down here, these are what are called oscillators. It makes all of us chart bros sound smart, but in reality, um, these are just additional layers of visibility that correspond with the price. So you've got oversold. I mean, the Bressert, when that blue line crosses that red line, that will have indicated that we've put in a daily cycle low. We're currently trying to put in a daily cycle low. And that daily cycle low needs to be confirmed by a trend line break. And then we need another trend line break. So you see, I've got two trend lines identified here. And one daily candle can break that trend line. We could break that trend line today, right? Right now it feels gross and depressive at 73,000, but you saw yesterday, you know, you went from 72 to 76 in 15 minutes. Like all this stuff is a mirage. It's all a mirage. If you're a slave to the tape, I really would encourage you to not be because things can change very quickly, relatively speaking. If we get up here above this trend line, what would that be approximately? In the short term, it would be, back above the 80,000 would be awesome. If we could close above 80,000 on Sunday, that would be really bullish. And it would, but I think we have, if 72, 73, 71, whatever we end up doing here, I think we've got a multi-week process ahead of us to really realize the Wyckoff spring that we've been talking about, if that's the case. Um, and that's just reality, bottoms, doldrums, um, they are here to make you want to quit and and leave. Let's see what else do I have here. Oh, well, so Bitcoin dominance, while all of this grossness has been happening, Bitcoin dominance continues to just look really bearish here and um not making any material ground up in terms of when I say Bitcoin dominance looking bearish, that's good for altcoins, right? And it corresponds also with the others BTC chart, which I think the others BTC chart is one of the most interesting charts in all of crypto right now. Um, but the Bitcoin dominance chart, as I've discussed in previous calls, is following a very similar pattern, albeit more compressed than as last cycle. And what we're looking for is this breakdown. That's kind of what we're hoping and anticipating for. If this goes up, then Bitcoin, that means Bitcoin super cycle, right? That means um nothing. It'll mean we're in brand new territory nobody's ever been in before. But by all probabilities, it could go up and then break down. Like that's my anticipation. Again, my squiggles are not to scale here. That's just what I'm anticipating. You also have the ETH BTC chart, which is the strength of Ethereum in relation to Bitcoin, and an obvious reversal what was that, last April, May. This was the original tariff tantrum moment. But do you see this right here? That bottoming process that took a month. That took a month. Just again, not causation, just correlation. Like that could be where Bitcoin is right now. It could take all of February to just frustrate the mess out of you before a parabolic move happens. And the same thing goes for Ethereum, the ETH BTC chart, right? It could be doing the exact same thing again. And then boom. That would be crazy if we saw a chart go backwards like that, but you get my drift. And then on to the really interesting chart here, which is the others BTC. The big long wick here was the 1010 Binance collapse, deleveraging event. Collapse is inappropriate word. Deleveraging event. But even then, it was just a wick down and others regained its power, if you will. And if we're being intellectually honest here, it's making higher lows, especially from a closed candle body wick standpoint. Well, maybe not from a closed body. No, not from a candle closed standpoint, but it is on an uptrend from here since December 19th. So here's the question. And by the way, when you're drawing trend lines, this is kind of how you do it. Trend lines are really helpful. They help you make decisions. So the question is going to be, can others continue this little again, these are low time frame parabolic, low time frame, not parabolic. It's not even the right word to use. But can it continue to climb up that one of these, upward trajectories, while if Bitcoin can give us a lift, right? If Bitcoin can give us a lift, then my early entry on SWE that has me at a $1.28 cost basis will feel a lot better, right? That'll be where my top 50, top 100 altcoins are performing well against Bitcoin. Now, what's the most likely scenario here? Well, if we just use our fibs, swing high to swing low, it looks like we could probably come up to this 0.5 above and stay above this trend line and then maybe reject. Use this marker instead. Where's my marker? So, we could come right here and then maybe break this trend line, but maybe we create a support here and retest the 382 line, and we just keep marching up this, 618, 786, whatever. That would make a lot of sense for my particular thesis moving into March and April. So this March and April move would make sense in light of an Ethereum expansive wave C, Elliott wave C. One more correlation is the iShares expanded tech software sector. This is a sector index of the NASDAQ. Basically, software has been selling off. Why? Because of AI. What is Bitcoin? It's software, it's code. The IGV here, the iShares Expanded Tech Software ETF, has had 3, if not 4, of its largest daily selling candles since 2001. You may remember the .com bust. Well, watch what happens here when I do this. That's NASDAQ. Pretty correlated until we get back in November. And now everything's been falling off on the IGV. Now, why am I showing you this? Well, now watch this when I show you Bitcoin. So it, again, not causation, just correlation to kind of help you wrap your brain around things so that you don't feel stupid, you don't feel ignorant, you don't feel like an idiot. It's just that you've got certain sectors further out on the risk curve that cannot absorb the contraction in liquidity on low time frames as well as the larger indexes can. That's what I'm saying. You have certain sectors, Bitcoin's a sector, IGV is a sector, that cannot absorb the blunt force trauma of a liquidity contraction on low time frames as much as the larger indexes can. I hope that makes sense. If that makes sense, give me a number 1 in the comments. If you need me to say it a different way, give me a number 2. Sometimes I wonder if what I'm saying makes sense, but this is basically the entire software market moving down while Bitcoin moves down. And it makes sense logically when you think about what Bitcoin is by nature. And then you look at the green and you're like, well, crap, IGV just feeds up into the NASDAQ. It's a technology index. NASDAQ is the index, like it is the technology market. And but the NASDAQ is way bigger. And that's my point. It's like and I've used the analogy before of Like crypto is like the little lone leaf out on the end of the branch in a storm on a stormy day. S&P 500, gold, silver, real estate, they're all closer to the main trunk of the tree in terms of size and stature. When you get into crypto, you take for granted how small it is and how risky and volatile it is because it's so accessible. You can open a Coinbase account in 15 minutes or a Gemini Kraken account or whatever, a Phantom wallet, and you can be swinging for the fences. But then you're like, well, this is unfair. Why does this happen to me? Well, it's not happening to you. It's just a $2 trillion, $3 trillion asset class that is getting whipped around by global liquidity divergences. And here's the real criminal. Here's the real perpetrator. The USDT dominance rose and made a huge counter trend rally. And I think it's probably topping out, hopefully topping out at the 786. But it did break this trend line. So anytime you see these trend line breaks, it's a big deal, you know? So the question now remains, will this do a little Eiffel Tower blow off top and die, or will it chop sideways for a little bit and antagonize us? But anytime you see the USDT dominance going up, that's the dominance of Tether, stable coins, safe haven, risk off. So this also shows you why prices are going down in your portfolio. And you got to ask yourself, well, will Tether dominance continue to go up, 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 and up? Doubtful. Doubtful. Um, but it did make a great counter trend rally here, and hopefully it'll top out at the 786, which in this particular condition, on the daily time frame, since the height of the bear market, that would make sense. Again, especially in light of potential expansive sea waves on majors like Ethereum. Here's that curve finance chart I showed you. On the 4-year cycle from its previous low to it actually is on a completely different time frame, really, than Bitcoin and Ethereum, which is wild to think about. But this is kind of a generic count. It's basically a failed 4-year cycle, and it's right translated, meaning it's like ready to launch. This is the way I look at this chart in correlation with the macro that we've already covered. And then Chainlink, my pride and joy, the apple of my eye, the most useful token on the planet. It has 90% market share dominance of the Oracle service market. And there's no way Wall Street or governments move forward without the use of oracles. So Chainlink is got a special seat at the table, y'all. Like a sub $10 Chainlink is a a godsend. It's an unbelievable opportunity. I mean, I was literally my cost basis is back here in this $4 to $6 chop range. Like this right here was miserable. This was miserable. This was bear market misery. This right here, we're touching an opportunity zone, and I think we're getting ready to do what ETH allows us to do, because Chainlink is a proxy or a beta to Ethereum. So this would be where I would anticipate Chainlink, Swede, these kind of tokens really creating max pain in the market. The markets want to create max pain. And the majority of people right now, I even saw a really long just Chainlink hater post on X. When those start coming out, I start looking at the chart and going, all right, yep, we're in an opportunity zone. We are in a right translated market here, and we've got a daily cycle low getting put in, and this is a fine time for us to potentially be accumulating and looking for an impulsive move up. Doesn't mean it'll happen by lunchtime. That's not my point. It just means if you have mid to high time frame um, uh, uh, time horizons like myself, there's there's fewer no brainers on the market than this right here. It hasn't. I mean, it hasn't even made a new all time high. That's the crazy thing about a lot of these top tokens, top protocols. Like, I mean, I guess you could say it's gotten close, but it hasn't really gotten close to a new all time high. So it's basically it has again this expanded flat, this running flat throughout its entire cycle, just like Ethereum has. So huge opportunities given the time horizons. Man, I talked a lot. Sorry about that. What's going to stop Binance from continuing their criminal activity when Trump pardoned CZ after invested big money in the Trump family? It seems like a never ending. The only thing that'll stop Binance is the Clarity Act, Brian. That's why I said what I said earlier. CZ is his pardon has nothing to do with legislation. So call your senator and tell him to buy your Democratic senator on the subcommittee a lunch and make a deal. Get this Clarity Act signed. Link is the Lancelot at the table. I really like that. I love the Arthurian legends. 1385 chain link average cost. I think that's wonderful, Vince. How do you respond when people say that link price doesn't increase when it is acquired? Or are they just making that up? Doesn't sound like a very sophisticated jab. I mean, there's far better FUD statements out there, Michael. That's what I would say. But I will say this, Chainlink is inflationary for a period. The Chainlink Foundation does have to use Link, but it also has a deflationary mechanism for staking the same way Ethereum does. So I think a lot of the running flat or expanded flat direction of Chainlink has a lot to do with its short-term inflationary tokenomics. But all of those inflationary tokenomics get eclipsed when liquidity increases. Do you still hold to 80 to $120 chain link this run? Well, let's look. If Bitcoin makes a new all-time high and if Ethereum makes a new all-time high, then I think that's very possible. Um, I wonder. I haven't actually done this. I'll try to do this on the spot. I wonder if I don't think this is the case. I don't think that's the same as Ethereum. I mean, it could be this. The way you figure this out, I just don't have time to do it because I don't want to bore everybody. But you have to count 5 waves in here in these ABC legs. That's kind of how the like that would be the argument for 80 to 120 is that the C wave exists here the same way Ethereum's does, and that multi-year resistance line, the yellow one here, even though I have an ascending line drawn out for Ethereum, that would be the case. Now, what would happen? Oh, it gets silly if I did the same thing for I sorry, I had my mouth covered. It would be silly if I did it this way. See how divergent though that price pattern is? I'm gonna go to the weeklies or 3 day. Let me go to the 3 day. So basically this what this shows you is that the chain link vesting schedule along with the bear market kicked in and it created this massive divergence sideways. It's in a huge accumulation zone, kind of like CRV has been in. So I don't know if this goes lower. I don't know if it goes back to the top of that previous range. I mean, it already is at the top of that previous range. So that the C wave, the expansion C wave that is a beta to the Ethereum C wave would be how we get there, Michael. But that's the other thing is like, okay, but like, what if it doesn't do that in March and April? For me, I'm fine holding Chainlink for 20 years, much less 2 months, right? So at least I know I've got a good asset that is in most major money managers' top four or top five, especially with a seat at the table at the White House. And knowing that the Genius Act requires a lot of stablecoin legislation or is strong stablecoin legislation. And all of these Fidelities and BlackRocks and everybody who's starting their own stablecoins, they have to have proof of reserve. And proof of reserve is one of the primary services that Oracle services like Chainlink provide. And so I just feel really good about owning Chainlink, at $9, at $800, at $4. I know I'm going to get my moment with Chainlink if I'm patient. Patience is truly the edge. I can't remember where I read that. Somebody said that yesterday and it was good. So I think that's something good to cling to. Though crypto is still much smaller than other asset classes, it's bigger now than it was several years ago. With that dilution, is it possible that the huge parabolic runs will be muted in the future? Can we actually expect um can we actually expect that when things turn around, the huge gains crypto is quote unquote known for happen again? I think so, Chris. I mean, for so bit let's just start with first principles. Bitcoin not diluted, very good tokenomics, very very low inflation. Ethereum is less inflation than it's ever been. As a matter of fact, I could argue that the recent update in December that the Ethereum Foundation made, and they make two updates a year, expanding the volume or the capacity for nodes or validators makes it even more deflationary because when people stake, they burn Ethereum. And so those are huge. And then when you start looking at the top 50, top 100, that is going to be a revolving door for crypto into infinity. And some tokens will definitely be muted and never come back, right? But the ones like Chainlink and Sui, I think, and Jasmy and Solana, Ondo, those good, big, like well-funded, well-structured, good tokenomic over longer periods of time will definitely have their convexity to the larger or beta plays to the larger stuff, right? Dry gunpowder suggestion, asking which token suggestions. Well, I mean, I've talked about Curve Finance today. I think it's really hard to avoid Curve. I think it's really hard to avoid Chainlink under $10, and I think SWE is an absolute steal, given the fact that I invested in it recently in a very large position, and it's at $1.06, and I'm in at $1.28. So those are three great opportunities, in my opinion. All right, guys. Solana at $90, unbelievable buy as well. Totally. All right. Great to see everybody. Fantastic to have you here. I'm going to post this recording as always in our member area. Thanks for being here. Appreciate y'all. Hang in there. Better times ahead.